Welcome to Day Trading for Success, hosted by the professor, a former math teacher, professional trader, and coder for Charles Schwab's Thinkorswim platform. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey guys, I'm going to show you what I go through every morning if I'm going to be trading the RV strategy. How do I find the stocks? I get asked that a lot. Obviously, you're going by your scanner ratings as it says in Day Trading Volume 1. So you want to make sure that you follow their ratings. Now, there's been a few changes to that as the markets changed since early 2023 when the book was first printed. But for the most part, it's very accurate. So if you go to your scanner right here, you're going to see I have this set for 10. Then it is ATR is greater than or equal to at least $4 within 14 days. That day means the 14 means days and the 4 means dollars. So that's going to make sure it's 4 or above. I think the book says 5. Some people even said it as low as 3. It really comes down to what is the volume. So I have this set so the volume showing the highest volume first as well. These are going to be my main contenders, but I go through more of a process here. Here's the other scanners settings set up to make sure it's an RV stock. I have it as low as $25, although it's doubtful you'd get anything below $100. But it's set there just in case there's a weird anomaly that comes in. All right, then over here on my watch list, I will have a watch list set up that's the same. So, I mean, you can detach this gadget and then you can put it anywhere you want on another screen or something to show your watch list. So that's another way to find them without even scanning, like what you're just going to go to the tried and true ones that you like to trade. But generally, the next thing you have to do that's really, really important is to figure out how are those stocks going to perform. So I have a day chart set here so you can know. Normally my day chart's a year back. I mean, this one's set for just a month back. And the main reason why is so I can see within the last 10 days, right? Within the last 10 days, how much price action is going to fall within the ATR. So you know we're going to set the ATR based on the close of this candle. So it's at $4.71. So you know on AMD real quick, you can just see this real quick without having to do any lines, any calculations. You know your ATR is going to be about, high is going to be about right there, and low is going to be about right there. So you know you're going to capture historical data with 3 days prior of the day that you're trading. So you have at least 3 days, which is good. It's not great. You know, the more the better. So you wouldn't get a high rating for that, but you'd still have a tradable stock it's a tried and true, really good stock. And then if you go into some of the others, like let's go to Apple and see what Apple's doing. So Apple, again, is this is a good one to trade here. So what's our ATR? So our ATR there was on $6. So now you know that, so this is a stock that you would be trading for the RV strategy. Now it closed here, so you'd know that you'd have somewhere right here would be your ATR low, and this would be your ATR high. So all of these, 1, 2, 3, 4, 5, 6, 7, 8, 9, even this one would be within the 10 days. So that's a way better stock to trade for the RV strategy. Right there is the Apple one. And then if we took another one, let's do AMD. I didn't do that already, did I? Did that, sorry. Let's do NVIDIA. And here's an example of what not to trade as far as trading specifically for the RV strategy. Remember, the RV strategy, you're going in between a range for your safety, and you know that you don't know, but for the most part, you can count on the stock moving in and out of that range. So get the book, guys, but that's going to show you how I do it. That's pretty much what I go through. So I wouldn't even consider this. Now, you'll see me trade these stocks like this all the time, and I'll say, hey, we're using the RV strategy, basically the strategy, but we're out of the range, but we're still going to use the strategy. And then I've gone back further to find historical data often, and that's because it's just the trading with the crowd. People want to do it. They want the excitement of a stock that has bigger volume like this. And then a lot of times, we know we can make money by it because the strategy is so good with the Fibonacci level and the historical data that we end up picking, we might pick one that's not. But if you want to be safe, pick the ones, like I said, that have the most days. You have a rating for that. The most days that fall in between that 10-day ATR that gives you the most historical data. Then you can probably use the 4-hour historical data levels along with the Fibonacci, guys. So hopefully that clears up a lot of how we find these stocks every day. Hey everybody, I hope you're enjoying the video so far. I wanted to show you a couple of tricks a lot of people don't know about. When you're on my channel, whether it be a desktop or on your phone, basically when you open any video, you're going to want to go down to more down here and click that. Now, if it's on a phone, you have to click more one more time. They give you another little option. But down here is where all the links are for all the stuff that I'm talking about, and that just makes it a lot easier to find them. Remember, when you're downloading a free layout, you have to highlight, right, left click copy, go into your setup on the Thinkorswim platform, the upper right corner, and then get into import or share item, and then push Control V in that box, and that layout will populate in there. And the same thing for the free custom scripts that I give away here from time to time and are on a lot of episodes. But these you have to click on, and they will take you over to the $1 Million Margin Club or to Amazon to purchase the books. And then when you go to the $1 Million Margin Club, this is what their website looks like. Here's a little secret you might not know about them, is basically they have a review for all those books that goes page by page. So there's Day Trading Volume 3, there's Trading in the Zone, Day Trading Volume 1, Day Trading Volume 2. So they're a book review YouTube channel, and they're starting to do the reviews of all the custom indicators so you can learn how to use them, also how to load all these things. And I know they're about to put out Day Trading Volume 4, and sometimes a lot of people just learn visually, by listening more than visually. So now you can look at the books and you can get the visual cues, as well as if you're out of the country and you can't get Amazon for some reason, this is another way to get it, guys. So just wanted to make sure you understood that. Thanks for following the channel and subscribing, and keep enjoying the video. So this is the exact layout for the RV strategy book, Day Trading Volume 1. This is pretty much as close as I could get to a copy that they put out in 2023 in March when they printed the book. A lot of traders still trade exactly with this layout. I do for the most part, but you see I've had many variations as the markets changed and how I evolved as a trader, and then custom indicators, which I believe make it easier. But we're going to go virgin here. We're going to show you what a lot of traders stick exactly with what this is here. Probably the majority of traders do, and there are so many success stories. So I'm going to make this available, and let's just go over exactly what it is. So this is a 1-minute chart. It has the scalping indicator below it, and then here is a day chart. This is the active trader. This is the level 2. This is a 4-hour chart minimized, a 1-hour chart minimized, a 15-minute chart minimized. This is the time and sales. This is the a 5-minute chart for 10 days. Here is a 5-minute chart for 2 days, and down here is the news. Now we'll open and get a little bit more detail into each and every one of these. So let's go ahead and open this 1-minute chart first. So we'll maximize that. And let me just auto zoom here. So we've already passed the day. Now we traded this day, and I specifically got rid of everything so that you could see how it looked before. Well, you won't see how it looked before because we set the day thing, but we'll figure out how to I'll reset it all up for you before we traded, and then you'll be able to see the trading already. You'll already have seen all this, whatever. So anyway, so this is a 9 moving average, 20 moving average, and the VWAP. This is the volume profile, and this is the scalping indicator. Now, the difference down here, I will point out, this is the more modern one than what they show in the book. The difference is it has the VWAP and 14 EMA crossover. So there's no reason not to put that on. It's giving you all the same information and a little bit more. If you want to get the other one, you can still get that on the channel too. So, or the $1 Million Margin Club has this, but it's definitely worth $24.95. They have that available. You can just use the regular volume profile if you don't want either of these, which the book says, and we'll talk about that on a 5-minute chart in a minute. So this is just a load in type of situation. This one here, the volume profile, is the Thinkorswim one that's offered for anybody, and it's it's set on the 70-30 range. Let me show you a little bit more about that. So the difference to get it inside here where it's marked today right here is you want to change this from yes to no, right? So if I put this back to yes and applied, it's going to move it over here instead of being in the day's action. So that's one of the biggest differences about this. So you definitely want to get that so you can see what's going on the active day. This was something that was discovered by professional scalpers a while ago. The other thing you'd want to do is you'd want to make sure that the high and the low, all the boxes are on, and that they're the colors that you want, the low red and the high green, right? So we'll go ahead and apply, and you can see there's the high green and the low red. Now this is a 70% for most all stocks. Now the market magnet that you might be familiar with that we'll show later on, it's not in the original book, is set it down to 50%, which is far more accurate for large cap, and it probably would end up about right there where you saw it hit a bunch of times. So we'll talk about that later. And then the scalping indicator down here, pretty amazing. So now we're at a closed market, but the blue column is the volume, the red are the sellers, inside, the green are the buyers, and then the sentiment would show up over here. So when it's not a closed market, this is really flying. So you'll see some of that coming up. And then down here is the day chart. Now different, you don't see me use it a lot here, but this is the 50 SMA, the 100 SMA, and the 200 SMA. And this is the ATR, the average true range of stock over a 14-day period. This is how the book says to set it up exactly. Let me give you an example of why this is important. See that 100 moving average right there? Let's just click along where it's closed the previous day, which is probably about right there. And we'll make a line there. Now let's look at the price action here on a 5-minute chart. So here is where it moved throughout the day, right there. So tell me that's not respected. This is before fibs or anything. So that is a number that you'd want to know, and you'd want to mark it on the SMA on the day chart, because that was marked back here the previous day, and here it came in and hit that line and really respected it. So something to think about. There's the reason that these studies are in the books, in the book Day Trading Volume 1, because it's been tested by so many professional traders. Get this over here. Then this is your active trader. This is how I have it set up. If you want to go in and change it, you can, move these things, add item and remove an item. I just drag them, if I want to do it. So like for this one, if I said buy, I could just drag that off, and then I could just drag it right back on. But you could do it the other way too, add the item if you want. That's how I think that the book has it almost exactly like this. Then there's the level 2. Then down here is a 4-hour chart, just like the book says. This is clean. Let's get rid of this. So this is just a clean chart, how you should have it. I do have these set up here on your chart markings, but this is a 4-hour, easy to mark for when you're marking historical data, like in the book. This is the 1 hour, nice and clean. This is a 15-minute, nice and clean. And then over here, this is the time and sales. So remember, this is actually, let's go over the bid and the ask here a little bit. So this is what people are bidding for a stock, and this is how much the people want to get for the stock. These are the exchanges that are going to make them available. All right, and then in between, to connect these, they call that the spread, 4 cents in between. So in between there's sort of picture a bridge going over with a toll booth in the middle. So the market maker, which gives you this price here, which when it's closed, it's kind of skewed because it wouldn't be higher. It would be in between the spread, just so you know. It would be like probably $232.52 is what you get. But since the market's closed, it's kind of giving you weird things. You'll see in the trading. So, and then this is the number of shares, but you multiply this by 100. Okay, so that's how many are waiting at each of these prices. So the market maker is going to charge you a commission to fill this a little bit. He's going to mark it up a little bit, and then they're going to try to give you the best price they think. I think it's where they make the most money, but whatever. There's be arguments about that till the end of time. But so anyway, that's how that works. And then after that happens, that transaction, then this is the ticker. So it shows you the sale of it. that happens over here. It'll show you what the price was, how many shares there were, and without multiplying these by 100, right? So you see those kind of shares coming up at that price, which is sort of what they ask is you're going to be worried about that because all those have to sell before yours is going to get filled or get bought up, however you want to look at it. So, this is why sometimes watching the level 2 is important because it could stall and go the opposite direction when you hit that number of shares. For the most part, you're seeing several hundred, and then it's their job, the market maker's job, to fill your order the best they can with the least amount of what they would call slippage. Like if you had 500 shares to get filled, they're going to try to fill it with the least amount of the price moving. You can see this moved, these are all at 55 cents, 55, 55, 55, 54. So probably you could get the 500 filled at very close to within a penny or two of the price that they're waiting. But I don't trade with this much, but you usually, rather than trying to watch the time, there's the time over here. This is why it's called time and sales. All right, the time's over here. But usually people are looking for, big clumps of red, big clumps of green to see, hey, what is the sentiment? Watch, because this is going to be flying by. But on large cap, mega caps, doesn't come into play too much, okay? Now let's get a look at the 5-minute 10-day. So this just has the regular volume that is offered with Thinkorswim that you might want to watch. So you want to pay attention. These coincide with the candlestick patterns, and you want to see if the momentum is going up when you're getting ready to buy. Is the volume going higher? Like right here, see the lines with this? If you were sitting right here in this position, but then you saw this volume go above the last volume, you would feel more comfortable to buy. And that's basically why people look at the volume. There's a lot of other indicators that help you a lot better than that, but this is the very basic on a 5-minute, and that's how this chart's set up in the book to do. And then down here you would have the news. No, another 5-minute. I'm sorry. This 5-minute is set for a 2-day. That last one was on a 10-day. This is a 2-day. That's so we can set our Fibonacci levels. Now, this is in the book exactly like they say, the RSI, when the price action goes above the 70 level over here, they think it's probably overbought and expect it to go back down. When it goes below the 30 level, it's probably oversold and ready to go back up. Now, I'm speaking in probabilities when I say probably. There's no exact. It's just the probability is more likely it would go the other direction. So that's all you get. That's the best you get with indicators is the probability, right? But as they've been getting better and better, in the last few years, it's literally like you can see the future. So we'll talk about that a bit. And then this is the ADX. Now, in the book, it had a newer ADX, a custom one, shown in there as far as I know because I used to use it. This one's just better. So I just put the better custom one in, really. Now this is just finds a directional. A momentum, like a momentum directional. So see if you're trending or not. So you don't, before you could just tell if it passed the 20, right here, it meant like, hey, it's getting ready to make a trend. When it passed the 25, it made a trend. Okay, you're in a trend, but then it was confusing. It's a trend, but is it up or is it down? Well, this makes it easier with the clouds and the colors here. Even though it's above this line, it doesn't mean it's all upward trend. This is a downward trend because it's red, but it's showing you the strength of the trend. All right, the directional indicator is showing you the strength. That's what this does, the power of it, okay, with the clouds, and then what way, is it up or is it down? So there's a couple of videos on this that I made that I would watch, but that's how that works. So that's a little different than the book, but you might as well use the better one. And then down here is the news. So, and that's what they say to put in. I have that on a separate chart normally on mine, a separate screen. That's basically the whole thing, and I will make this layout available for you guys. So let's go over exactly how we set this up from start to finish now that you have our layout here. So the first thing you do is, according to the book, Day Trading Volume 1, is you go into the day chart. You look at the previous day. So let's get some price levels set up here. I'm just going to put some random price levels. So the close of the previous day, if you look up here, that's C is the close. So I go over the candle. It said $227.65. Then again, I'll go back over that candle and you look at the ATR, the average true range range over a 14-day period. Okay, so that average true range was $6.45. We'll call it 646, so we can divide it in two. So when we divide it in two, we got $3.23, and then we add it to make the high, we get $230.90. So let's set that one first. We'll go ATR high. Oops. Okay, we're going to make the high green, and we're going to make it triple thick, and that's our ATR high right down there. So you can see the candle closed there. So this is where, the candle closed here. So here's where the high is. So you expect the low is going to be down here. So the low is set in at doing it backwards here, 3. And then our price was $224.44. So that's down there, and that's about right. Here is the middle. So what was the purpose of that? In the book, it explains to you that you're basically trying to find the price action that will happen today. So you're using the previous days to see where that moved. You've created a giant channel or a giant range by taking a single number and dividing it into two and then splitting the difference from the close. So you can see that as it traded throughout the day, because we're past the day now, that it did pass it, but there was a lot of trading in it. So the next thing you would do on a situation like this is you go into the situation on the book is you go into the 10-day 5-minute. So this is set for 10 days on a 5-minute chart, right? So we're going to go back and we're going to make sure that we don't mark today by accident. So here's today's trading action, right? And you look for the high and low. Now, when you're marking Fibonacci levels, you always mark left to right. They could be low to high. In this case, it's high to low, but you're always marking left to right. And the book says you get right on the wick, the highest points. That's for 32.48.35. Got to speak here. Been a long day. I'm just going to end up typing it in there. 48.35, and this is 225.02. Let's see if I do any better here. Yeah. Oh, I'm not doing that. Hang on. What am I doing here? Remove drawing. I'm doing a Fibonacci level. Okay, let's try that again. So click on your Fibonacci up there. Hey, look at that. I got it the first time. 48.35, and then that's going to be 02, 24.02. Look at that, baby. All right, so there's your fibs. Now, this opens up. Now, when people use Fibonacci levels for a lot of things, considered nature's mathematical formula, in this case, the lines all are given the same weight as support and resistance levels. So you're looking for which one's dropped in between, right, the the ATR level. So you have two of them that you'd really want to watch. In this case, we know that the price action left for the day. So what happened? Yeah, so this one ended up coming into play too. But we don't know that that's going to happen yet. So let's go to the next thing we do, which is you go down to the 5-minute here. That's a 2-day. So this one's set for a 2-day, right? And let's give us a little more space to work with here. So you can... There's a chart video that shows you how to do all this stuff. But in this case, now you can't use either of those. So we're going to find our own high and lows after 2 days. So this day didn't happen. So it looks like this would have been the high, right? And then the low would have been just before the market opened. So right down here. So we can use this one. So let's get our fibs here and get into the same basic, same basic area here, which is... this is, well, we're close, probably about right there. And then we'll go down to the low, which is 226 even. Come on. I had it. There we go. And I'm going to go ahead and mark that a different color while we're on it. So we know the difference between the 5-minute 2-day and the 5-minute 10-day. So let's just make sure we've got this marked correctly. So this should have been right here. That high of that candle was H 234 even. So let's make that 234 even. So it's 1 penny off. That was close. All right, so now we have all these channels created in between the ATR levels. Let's open that back up so we get a better look here. Now we can already see that a lot of them came into play here, but let's just look at the price action for today, and we'll watch this day trade out. I'm after it now, but I wanted to make sure I could recreate them for you and give you lots of time to see this. So you're trying to create channels, and you can see this Fibonacci level is already giving us a lot of channels, but it's above the ATR. So when we go to mark our historical data, we're going to be at a disadvantage because I'm not going to know this is going to happen. So we're going to end up using these fib levels a lot. Now you can mark levels after it started to trade, like you might want to, as it mark that high during the day. That's it. Well, that's actually it's over. So this is where it would have come into play right here. So it barely, it just hit that fib and turned around because the trading would have been over right here. 10:30, a half hour after market open. So we're doing a little bit of analogy here, but let's continue to set up. So the next thing it says to do after that, according to the book, is you go to the 4-hour chart, which is right here, and you look for historical data channels in between the ATR. Let me just make sure. Wow, so what a day, huh? Yeah, that was a heck of a day. So it just broke right out of the ATR upper range. So we would have been looking from basically this area backwards and looking for anything that would have marked it. So here's what we would have done. So on a 4-hour, I'm just trying to think if there would have been enough to. I probably couldn't have got more than 4 or 5 channels, although the fib's in there pretty good. So what am I looking for here, guys? I'm looking to create channels because the way the book reads is that in between these channels, this is where you try to take your trades, and you want to set your share size based on the traversing the whole channel. So this would be like, this would be a pretty big channel from 226 all the way up to 27.89. So that's way too high, 227.89. I would not want a channel more than like 25 cents, 30 cents. So what can I do? Well, I can mark one there. That helps right there, and then maybe mark another right there. That probably could have cut them down. So I'm seeing where the price action turned around, and I'm going to mark a level. But frankly, it's not giving me as much as I want, so it's tight. So I think I'd go down to the 1 hour and look for more places I can find a legitimate turnaround. So let's start with that. We can go back as far as 10 days. So the first one I'd probably mark is right here. Let's change this to, so we're going to put 1 hour because that's what we're marking this as. And then I'm going to turn this off, and then I'm going to save that as the default. And there's our first 1 hour level right there. And then I'm going to move up here I'm not even going to look over here because it's not, you start from the furthest back, right? So probably there's so many taps right there. And then it seemed like, it seems like actually down here, over here, and then across here, it seems like this is actually a better level, like right here. You're hitting the most here and then across here, all right? And then definitely down here, and hit there again, there, hit here, here, and here. It seems like our our Fibonacci level takes care of that. This is almost being taken care of here. This is another one. Another area where there's multiple taps, so I probably hit that. See how it tapped it there too, and over here. Okay, now these are all within the ATR, so I'm just marking the levels that I clearly see. Here's some others right here, and then this would probably be another area I would mark inside the ATR, like right there where it abruptly turned around. Now, not knowing that the price actions is going to go above that, often I'll take a few below and a few above. Now, what this tells me as a trader that does this a lot is there is no sense normally marking below when most of the price action's above and it was starting to curl back up. But maybe, I would listen to the news too, maybe, but there's nothing to mark down here, right? There's nothing to mark. There's no price action over here within the 10 days. So this is my only other choice. So I would go ahead and mark a few of these. So that hits so many times there. That hits the fib. This hits here. So I would mark all of those, and I'd probably mark where it abruptly turned around right here. Probably right there, actually. And then that would pretty much be all I could do. Now, that would have fulfilled. Now, the book says you mark it at a 4-hour chart first. I don't believe there was enough channels. Then the 1-hour chart. And if there's not enough channels, you go to the 15-minute chart, or even the 5-minute chart. So I was able to visually observe this is going to make enough channels for me to follow the strategy to get in and out. So you're following the overall range, and then you're making channels for tighter range. Let's see how we did. I know I did good today trading. Let's see how this isn't going to probably be exactly like how I set it up for trading, but it should be very close to it. So here we go. Now we look at the where we started to trade. So we would have started to trade right here. Okay, then we would have stopped trading, like at least by, I think I went a little later, right there. So here's what we can see. How did we do on our trades here? Oh, I'm on a 5-minute chart. That's why why don't I have more options? Let's go to a 1-minute chart here and get back to where our time here. That was the hard way. Okay. Now we're cooking. Okay, I was thinking like something's wrong there. So I'm looking down at the time down here to find where we would have traded to, and we would have traded a little bit past that. Let me pull this back to so I can get it over to 1035. Now I'm going to open this up so we can get a better look. I'll go from 956, 956, 7, this area, and then I'll pull it over to get past 1030 to about right here. Now here's what I would have seen as it developed as we started to trade. So my first trade, I probably would have called it long here. I probably would have been correct seeing it stepping up here. Now, as you know, it came off this fib. So there's a Fibonacci level here. So I would have played that up, and I might have turned around here. You're going to get to see. And then up here, I would have loved to have a level here. So this would have, I think I probably struggled here, but played it off this fib, and then at some point jumped the right direction. Again, we don't have any levels here, so definitely missed a level here. So I don't know did I actually miss a level there? Let me just make sure, guys. That is how you set it up on the book, though. So I don't know where we were having trouble, up. So we were having trouble up in here, right? That there wasn't. There was no levels marked up in this area, right? Is this where we were? I can't remember where we were. Darn, I should have checked. Let me do it again. Taking a little longer than I wanted to take here, but let's just take a look here where we were having trouble. Because I may have just missed the level. So right at this price area, 231.27-ish, and then 231.94-ish right in there. Let's see if there's a clear and obvious area that was missed. Happens. So this is where our historical data is. One. Right here is not really. I don't really see anything. I think we had this void up here where we hit. And oh yeah, there was definitely some. Well, this is because this is above the. This is the problem. This is above the ATR, so that's why they're not marked, because it does look like there's a clear spot right here. If I'd marked more above, look at that, So that's just a shame that we didn't catch those the first time around. But that would have been areas that if I had played it above, I would have marked all those. So it's not rocket science to see where these things are. Did I do those in the 5 minutes, I hope? Yeah, I still missed that one. Let me just do this for a second. I'm just curious to see how far off this is, why this isn't marking it. That's right there. There's no real level there. Oh God, look at that. Yeah, right there. I clearly missed that. So that's the thing. I did it fast for the setup here, but that I should have gone back far enough to catch that. That's a clear turnaround if you've ever seen one, and that's right where we needed a level. So this is the thing. I can make mistakes all the time. What would have been happening when I traded that is I'm not sure I would have gone back, or somebody else would have. A lot of times, other people call it out to me where it was, or I might have just marked it right on the actual. Is this the 1 minute chart? Yeah. If this hit like the fourth time, I probably would have put a flat top there and then started to use. You guys have seen me trade, so I would have caught it eventually, but I should have caught it when I set it up. Is what it was. But anyway, that is the step-by-step how you set it up, and then you're trading in these channels. You're trying to go up and down, short, long, or if you only trade long, then you're waiting. Boy, did that fib ever get respected. Right at the ATR. You know how I respect the ATR levels too? It just kept playing off that ATR. We just missed that level. We would have had a perfect setup here. Eventually, I would have got it the hard way. But I can't remember how I traded it today. But anyway, guys, that is the literally step-by-step how you set up these charts prior to the day beginning.